After trading Forex for over 5 years and futures for only 1 month, I've came to the conclusion that future is actually easier. Check this out. So we're going to be looking at this chart right here. As you can see, we're going to be doing the same exact strategy. Well, at least the fundamentals of it, right, in comparison to my Forex one. So we're going to start to mark out the efficiencies on higher time frame like we always do. Start to mark out some liquidities. You can see there's also a gap that's filled here. So that's a good thing to take consideration of. And we have previous daily lows right here and previous daily highs. They are going to be. So this day is almost ending. We're just going to skip through it. Although we just filled the gap and it's London close. So you might have a London close retracement to the upside. Then you might see a trade based off of this. Also, yeah, as you can see, it's going higher and the day is about to begin. So the day starts and we have London sweeping liquidity, sweeping the previous daily high, which is the liquidity that we were anticipating to be swept, right? We were not anticipating this to be a demand zone. Price come test it out, right? It didn't do much apart from sweeping these highs, and it's also during Frankfurt. And price is overall bullish, so most likely you want to be looking at buys or at nice sweeps of liquidity above and not just retests, right? We want to be trading the movement like this one or perhaps this one, as we will see it in a few minutes, and not a huge move downwards to then trade the retest. Okay, because that's a good way to make you fall on the trap. So we have London sweeping the liquidity, but we're trading futures, so we're not really focused on London right here. So we're just gonna let it play out. And if you know about the sessions liquidity, which London likes to sweep Asia, for example, and New York likes to sweep the highs and lows of London. So if we're looking to trade New York and we're keeping our stop losses at a high or significant low of London, then we gotta take consideration of that because it will be risky. As soon as market opens, it will look to either sweep one or the other. All right, because it will happen. It will happen. You see New York sweeping London right here, New York sweeping London right here, both New York sweeping London right here. It will happen, right? Because also it's futures and the New York session is really the session that's going to move the markets. So in here you have the sweep of liquidity, one sweep, two sweeps. This is a very good position for me in Forex, right? But it's futures and we're coming close to New York chart timing at 12 o'clock in UTC plus 2. It's the hour before New York actually opens, so we're not going to be trading that. And I mean New York open, but I mean the overall session and not the New York Stock Exchange, right? So I'm going to be waiting for this. And even though I don't know, yeah, there will be a trade right here, perhaps, if this was the good session. Because not just about the chart itself, but also about the sessions, guys. You got to keep in mind of timings. You can give me two identical charts and two very good setups, but if the timing is not good, I wouldn't take them, right? The timing is a very important thing because, like I said, right now you have New York starting at 1 p.m. right here. This in between was the New York chart timing, which also came to take out London. And as I said, the New York will look to sweep the highs and lows of London. So having your stop loss here, whilst the price is just starting here, I mean, it's also the proximity factor. You'll most likely come towards the high to also trap a lot of people. Because even though it did two sweeps, it's not that significant of a trap, meaning it will probably come down, break some structure around here to then make people get themselves on it way easier because the trap will be way clearer, right? So we're going to continue. Boom. New York just swept the highs of London. So right now, will I be looking to short? Because the thing with this future strategy is that the most quality setups will come from New York opening and sweeping a decent liquidity, right? So we got the major liquidity swap around here. So we're looking to short. We're at all-time highs, and now we just swept London. The thing is that I would advise you to at least wait for the market open, and that for the stock exchange, because the market opens around 3:30, and this is a prime time on the New York session, and a good timing to be trading London, right? But even on Forex, I wouldn't place myself here because I know there needs to be two sweeps at least on the same session. It's maybe getting confusing, but even though we did already two sweeps here, or you can even consider sometimes doing one sweep on London and then a second sweep on New York, even though we did just that, which is a major key factor of my strategy, as you know, I wait for the sweep of liquidity and then two sweeps following that, meaning the overall sweep of liquidity is the trap on the larger scale, and then once we zoom in, we got to wait for a trap on the lower time frame scale. But you got to keep in mind that if the sweeps are in two different sessions, then it's not really valid. You got to wait for two sweeps inside of the same session. It's like the people that only trade New York, they will not get trapped around here because they already got their sweep of London, so they can just trade it. It will be too basic like that. So although it's making a lot of sweeps and it's getting complex, you add the sessions factor to guide you, and you also wait for the market open, because right now it's looking very good as we got a clear breaker structure down below and we got 30 minutes until market open. So it can do either one or two things. It can use this liquidity as fuel to do a continuation move on the open, right? Because the open is going to go crazy. So I'll just recommend you to wait for it. But if we do a continuation, then there's not really much to trade, right? But people are most likely already doing this. They're seeing the sweep of London, and they see this breaker structure, and they are most likely already doing this, right? And it's valued. Like we got Asia, we got the efficiency here, we got the P low. It's valid to go search for shorts. The thing is, what I just said, 30 minutes, New York's about to open, and boom. With this impulse, and with this breaker structure right here, and the two sweeps around New York, you just got it. It just tells me that this was a buy to sell. And because this was a trap, this will become a trap. So right now, even though we got 1, 2, 3, 4 sweeps, 2 were in London, 2 were in New York, already you know, because if I were to take the sessions out, I wouldn't really know what to do here. Besides, like, yeah, here I can see that this is a clear trap. But if not, I would be perhaps trading this because it did a second sweep, then it did this trap. Maybe I would be trading this, right? Even if you got a good enough reading of liquidity. But once you had the sessions, it will guide you, because that's why I don't normally use indicators. I like to see the charts by itself, reading liquidity on advanced level just by looking at the charts. But I use an indicator that helps me read better, right? It depends if you consider an indicator or not, because it's not really helping me whether I need to buy or sell. It's just to see where we're at and read the charts faster and clearer, right? So right now, we got it right on the spot as the market opens. We're gonna look at some structure, M5, just by the candles I can see right here. We got it. And I'll most likely be placing myself here with a stop loss a bit aggressive on this level. On stop order though, I would already be in at this point, and target a 1 to 3 to at least these levels, right? And at least London lows and at least Asia lows. Because like I was telling you about the sessions liquidity, New York already swept the highs of London. So right now, maybe we'll go look towards the lows of London, right? And it did a good enough liquidity. And also the smart money trap cycle, because this was a trap. I would recommend you to just have a look at my channel, have a look at my YouTube videos, because everything's there, right? Just that I can't really put it everything in a single video, but I hope you're understanding along, right? So right here, I'll be placing myself on stop order though. Let's see if we get tagged in. We got it, and boom, you got a huge move already because it was just a liquidity, right? This is the most beautiful part. Boom, and we got it. Nice and easy. This is what I like about futures. It's just these nice and easy trades. But you gotta be quick and you're gonna analyze it better. Some people would be saying, like I saw a guy, for example, saying that this price action was not good. Right, for me, it's perfect. It's perfect. Market just open up, sweep something to the upside to then move lower. That's perfect liquidity. And now let's see where it's going to go. And guess what? It's going to sweep something underneath. Because that's how price moves. It sweeps on liquidity to go look for the other. Right? And you can see a clear touch on that efficiency point that we discussed. But it can even go for this liquidity. But let's see. Let's see if there would be a buying opportunity of this level. I mean, it could give you a win. Easy. And then what does it do? It goes sweep the, it perhaps gives you a win around here if you can trade it overnight. It sweeps the previous daily low again, and it goes sweeps the previous daily high. Right? It's all about that. And in here, I'm not looking for a huge move downwards for a crisis, right? I'm just looking for my fixed risk reward of 3. Maybe I could have go for the structure, at least this one. Perhaps even this of the efficiency. But then I could have also think that this would be target. But instead of going for it and have a lot of floating profits, but then be left out with a break even or 0, I'll just go for my fixed risk reward and get a win. Right? So I'm gonna show you even an easier way to trade this because there was a smart money trap, but I would just like to mention here, like, you guys can easily use this on the firm that I've just found. Earn to trade. Look, guys, 8 years in business, which is super good, with also a good trust result on Trustpilot. It's also very good. And what I also like about them a lot is this trader career path, where you can pretty much just double the account size by achieving the profit target. And this profit target is the same as the challenge, right? It's nothing crazy. You just got to do 6%, right? You do 6%, double the account, 6%, double the account, 6%. And you can pretty much start from a 50K evaluation to a funded 50K all the way up to a 400K funded account. See how crazy is that? And what really makes them different, apart from this, is the fact that you can get unlimited withdrawals from just $100 without any cushion or buffer on the funded account. Right? So that's amazing, because if you're trading futures, you know that the profit targets are small, but once you're funded, you need to get a first buffer in order to get some money out of the account. It's pretty much like Forex, where you just have the funded account. Whatever profits you make on that, you were able to withdraw it. In here, same thing, without a cushion or buffer, which is very nice. And on top of all of this, there will be no setup fees until the actual withdrawal. To make things better even, they're currently offering a 50% discount on August, but they've been kind enough for you guys to give 60% off if you use the code Dylan. So go in the description, see the link there, see the code, watch these prices, as you can get the 50K for $95 and bring it all the way up to a 400K challenge if you know how to trade, guys. If you're looking for a more normal approach, you can also try the Gauntlet Mini, 6% target, 4% drawdown. And these are the prices with a 50% discount. But you can get way more if you use the code Dylan, like I've mentioned. You can see some reviews here. You can go to Trustpilot as well. Let me know if you guys get one. And I really wish for every single one of you to get funded this year. As you can see by my premium group, I actually traded that same trade I shown you guys. Right here on my premium, I said NQ short for those looking to trade futures. Was a bit late on a signal because was still looking to add these or not. But I'm actually going to start adding these, at least the high probability ones, as I let you guys know here. And it was a TP, just like I shown you on the backtesting, right? You can see by the arrows. I don't know how you would be able to fake this, but if we just jump on NQ, you can already tell by simple charts. Let me just take this out, right? I'm not paying for the premium because why am I supposed to? I got this indicator which gives me 20 indicators and don't really need much from it, right? So as you can already see from this level, we got New York opening, taking out New York trap timing or London highs, whatever you may want to call it. But you can really already see by the candles that were made 1 week, one move down, and another smart money trap right here. Very good. And it was already at 4 p.m. So you can see how it sweeps it, goes down below, makes this level a trap, and then this level a trap. So you can pretty much just trade this. I can't remember if I did or not, but I would probably place myself like this. Up either here. Yeah, probably here, because here the breaker structure would be too big. It would give me a stop loss too big. Probably go a bit aggressive on the stop loss as I do in futures, but not on Forex, and ride it all the way to 3. Easy. Right? But this is with the smart money trap factor. But on futures, I've noticed that you don't even need to look at the smart money trap factor. Most of the times, price just opens on market open and sweeps the liquidity, just goes. Like here, for example, the move doesn't go all the way up as it does a smart money trap on London close. Those, it's a thing that I like to mention, and I've talked to my mentorship students about, but I'll give it a sauce for free. On Forex, I don't usually wait for a trap. On London close session, is this pink kill zone right here. But on futures, it's totally the opposite, where it will do a trap on London close most likely than it will on New York. Okay, so here you would have a position like this on London close, right? Always with the fixed RR of 3, as you can see, target the next day if you're able to trade overnight. But in here on futures, depends because the stop loss might be too big. At least here on the M5 candles, we have the sweep of liquidity, as you can see by this red line, and then depending on how much you target, it could be a stop loss, it could be a break even, or it could be a TP. Here you have a sweep of London, and then it continues, but it's more of a continuation. I'm really looking for the best setups around here. As you can see, recent price action hasn't been the best, but hey, liquidity works all over the place. And I'm just going off a recent price action because I don't want to be lying to you and showing you this perfect week of 2022. Like, nah, this works most of the times and will keep on working throughout the years. As you can see, another London close trade, as it also has that retracement factor, because this was a trap, this would be a trap, clear trap, right? I'm just looking at the M5 here to show y'all some, but yeah, as you can see, London's right here, Asia's right here. It sweeps one to give fuel to sweep the other, as it always does. Right here, perfect. Okay, this is the trade we showed. This is the trade we showed. It's the 29th of July. Here, yeah, it sweeps again and then it goes, but it's not that good. It's not that good. Here, perfect. Okay, finally. But here it gives you again the smart money trap factor. But if you're able to just wait for the market open, then you won't even fall for smart money traps. Because the thing with Forex is that some of you might fall for the smart money traps just because we had the liquidity sweep and then some breaker structure. In here, because you got the overall market open, you may be able to avoid them, as I'm telling you to just place yourself afterwards. Like, place yourself after the market open, 330 UTC plus 2. You don't position yourself beforehand, because as you can see, we have a sweep of London, right, just by the candles, a reaction from it, probably a lower time frame breaker structure here, not probably, definitely, because as you can see just by the wicks, right, and then another sweep down below. Reaction looks very good. It'll probably be a trap as well. Boom, 2 sweeps in the same session. Yeah, forget London, forget Asia. I mean, consider them as liquidity, of course, but trade after the open, one sweep, two sweeps. I mean, basically just one sweep because it's after the open, right? So boom, you got it. But even if the liquidity isn't swept yet, if you wait for the market to open and then to sweep it, you'll get it. In here, same thing, guys. Same thing. We got a sweep of Asia, but we're not trading that. We got a London sweeping Asia. We don't trade that. We got New York sweeping London, but we don't trade it yet because it's still at the timing where it's not, the market's not open yet. Stock exchange market is not open yet. In here, it opens, but it does whatever here inside of the range. It doesn't do much, and then boom, another smart trap trade. You can easily catch this, right? And then you got, and then you're close to 5 p.m., which is London close timing, right? The indicator is kind of skewed on futures here. The session is supposed to be 1 hour early, and then you can just ride away because it will be a retracement. Because London was bullish, New York was bearish, and London close will most likely be the same move as London. I know I'm dropping a lot of gems in here. That's just the way it is, right? If you're looking for a scammer, you can go towards one, but in here you actually become profitable just out of free content. So, boys, same thing here. Same thing here. Okay, does it or later? You can also anticipate the 4 p.m. timing. It's also very good, just to give some 30 minutes for market open to develop. If it's kind of far from a sweep of liquidity, or if it's just moving slow. Okay, so in here you might have needed to wait for a smart money trap, because I can see the candles, beautiful reaction, and some people might have been trapped here. But if you waited for a good, this was kind of a double one, but in here more conservative, right? This high that made this low. You could have gotten the win if you waited for a more clearer breaker structure and not just something inside of this on a 1 minute. But as you can see, man, you can see the lines that I've drawn. It's always like this. It's a sweep of liquidity and then price moves the other way. In here, market open. There's nothing for you to trade here apart from this small little Frankfurt high getting swept, right? I don't know if you'd like to trade it, but yeah, you could have gotten 12R from this level. One sweep, we have two sweeps just to build you some structure. You take it. It is a lot more easy Forex because you have the sweep of liquidity and then another sweep of liquidity, meaning the smart money trap. But if you just wait for the sweep of liquidity to perhaps be made in a pre-market open, you don't trade because you know that's most likely going to be a trap because of the overall volatility when the market opens. That might just tag you out if you are in a position and then move your direction. So that's the way it can be a smart money trap. So what I would advise you to do is just come into the markets, have your liquidity drawn, right? It's not that hard. If you need to, you can go to my channel, watch a lot more videos on liquidity and on how to identify them. But I can give you the session liquidity, previous daily highs, previous daily lows. Whatever you consider the swing lows, swing highs, that's liquidity, right? I would much rather see a liquidity get swept rather than some order block getting touched on a higher time frame that's working and stuff. It's way more high probability that a setup works if we just sweep liquidity instead of just respecting it. So you come into the day, you have your liquidities drawn, right? It's kind of moving slow because market isn't open yet. And as soon as it does, 3:30, whatever your time is for the market open, you'll see market shoot up, okay? Sweep the liquidity. Right now, you immediately look for shorts because you know there's some shorts, there's some possibility lower as there's liquidity there, right? And you just take advantage of trade if you see some structure, this, and then boom, you target the liquidity or go for the fixed RR and you get it. And then once you see this liquidity, you already know because this was a trap. There can be a chance that this will become a trap right now because right now it's too visible. That's why you trade it at the moment and not wait for this to happen because that will be most likely a trap. Right? Okay, doesn't mean it will be a trap all the time, but right now you can use the concept of going from one liquidity to another. Here you can also buy to do a ping pong and then take this out, and then here you can short it again. That's how the structure really moves. So I hope this has been a helpful one, and I'll see you guys on the next one. Thank you for watching.